Hey, yo, good evening, viewers of YouTube. My name is Tyler of Chico Crypto, and welcome to the channel that some people think is negative 90% of the time and only positive 10% of the time. Well, all I have to say about that is it makes sense, since 90% of crypto is shady and 10% is a shining light in a world of dark. So let's keep the lights down low because it's time for Chico Crypto. Today, I would like to make a case for the next bull run and what that might look like.
Here come the bulls, and there go the people.
In 2017, we experienced some noticeably unnatural growth, but things have settled down. Will we again see another parabolic bull run, or will the next bull run be much different? To explain this, first I would like to discuss what happened during the last parabolic bull run and what were the major factors that contributed to it. Last bull was a perfect storm and led to a wave of investors, retail, and some institutional level to pour billions of dollars into the cryptocurrency markets, leading to the entire market capitalization being worth over $750 billion. And many people thought it would smash right through total market capitalization of $1 trillion. We didn't reach $1 trillion, but what contributed to the bull run? Anyone heard of the ICO? How about an ERC-20 ICO? Yes, the crypto market saw an easy way to issue a token, and thus many projects utilized Ethereum's ERC-20 token standard. We saw hundreds of companies begin issuing tokens, either within the Ethereum ecosystem or issuing a token and then promising a mainnet swap once their mainnet was ready. Never before in the history of cryptocurrency had it been this easy to launch a project. In the past, you had to actually build your own blockchain or actually fork a blockchain, which took at least some technical skills. With the gains that were made early on from some ICOs, many people wanted to get in.
And there go the people.
We saw a boom in mass amounts of liquidity going into these projects, promising some of those massive returns. Some did, most fell flat on their face after the hype settled down. But what caused returns to happen early on, especially with projects that launched before or during the 6 months of the parabolic bull run? Of course, the market maker, the granddaddy of all coins, which, whether you like it or not, pulls up the price of other cryptos and eventually brings them down. You know what I'm talking about. I'm talking about Bitcoin. Well, Bitcoin, the market mover, might have had a little help pushing up its own price. What in the world could I be talking about? I'm talking about USDT, or Tether, being issued in critical situations to artificially push up the Bitcoin price. Bitcoin, for the most part, had organic growth up until the Tether printer started to run rampant. As we can see from this chart of Tether's market cap, Tether issuance was pretty silent until the middle of 2017. Around then, the Tether printer went wild and the market cap of Tether exploded, which resulted in an explosion of Bitcoin's price. As we can see from this chart, which starts in October of 2017, Tether issuance happened at critical times when Bitcoin's price seemed to be correcting down, and extended even after the dip from 20K, issuing more and more Tether, 1 billion more to be exact in 2018. Although all of 2018, the price of Bitcoin did significantly go down. No crazy pump like in the last half of 2017. Could this have been the powers that be in crypto exerting force to keep the Bitcoin price afloat throughout 2018 instead of the rapid crash that would have happened? It's hard to know 100% what actually is the case. One rogue warrior who is constantly on the case of Tether and the people behind it, Bitfinex, is always putting out good information. Their name is Bitfinex on Twitter, and if you haven't given him a follow, I would highly recommend it. Now that we learned what were some of the probable factors for the last parabolic bull run, let's make a case for the next bull run. What will be the factors that contribute to it, and how far away are we from one? What I like to do is pull out the Bitcoin price chart from its beginning to where it is today. Now, if we take out all of the bubble craziness that happened in the second half of 2017 and through 2018, then the growth of Bitcoin does look semi-natural. Like the price of Bitcoin between $3,000 to $4,000 might have actually occurred at this specific date and time if Bitcoin was traded against actual fiat money instead of the possibly printed USDT. That is what we call organic growth, and it is obvious that this last parabolic bull run was indeed a bubble that got way out of control. Although in regards to actual fiat, Tether still makes up nearly 50% of the trading volume, as seen from this chart. Actual US dollars are nothing in comparison to Tether's hold on the markets. And Tether isn't trying to stop its control, it's actually trying to expand it. Just a few days ago, Tether and Tron, led by Justin Sun, announced a partnership where Tether will be issued on the Tron blockchain as a TRC20 token. If that doesn't make you sick, I don't know what will. So what needs to happen for another bull run to take place? And I'm not talking about a crazy bubble bull run, I'm talking about organic growth of the ecosystem that is stable and healthy. Tether needs to lose its grip. Now, I'm not the biggest fan of stablecoins to begin with, but I get why there is a need for them. The volatility of the crypto markets. But in my eyes, almost anything is better than Tether right now. There is Maker, governed by a DAO, and through smart contracts, create a stablecoin called DAI. It's a great concept, but its long-term viability has yet to be proven. Actually, I have a video coming out investigating that. Then there is True USD, which is a USD-backed ERC20 stablecoin that is fully collateralized, legally protected, and verified by third-party auditors, unlike Tether, which shies away from audits. Another fully collateralized and audited stablecoin is USD Coin from Circle. Other coins like it include Paxos Standard and Gemini Coin. Yet, even with the rise of all these new stablecoins, Tether still has a stronghold on the stablecoin market. Just yesterday, Tether had nearly $9 billion in trading volume, while the other stablecoins I just mentioned had under $135 million in trading volume. Combined, peanuts in comparison. But hey, it's a start. All I have to say to traders and investors involved with stablecoins, if you want the long-term health of crypto, you will stop using tethers as your hedge against volatility and start using other stablecoins. Please. Now, there is another concept coming, like the ICO, which could contribute to another mass influx of liquidity. The concept is called the security token offering, and many platforms are coming to capitalize on this new concept. Basically, an STO is like an ICO, where an investor is issued a crypto token representing their investment. But unlike an ICO, the security token represents an investment contract into an underlying investment asset, like stocks, bonds, funds, or real estate investment trusts. These are fully regulated offerings, meaning in one hand good things, as there will be more investor protections against scams, as the company trying to tokenize will have to prove cash flows, have repercussions if they turn out to be a scam, plus many more regulations. Although, especially in the US, you will have to be an accredited investor to partake in the offering of the security token, just like how an IPO works right now. This doesn't mean once offering has taken place that regular investors can't trade them. They can. They just won't get first pickings where most of the money can be made. Is that fair? In my opinion, no. Some projections, though, say that within the next 5 to 10 years, the STO market could reach somewhere in the $10 trillion range. Now, is that a case for an impending bull run? We will have to see. All I know is things are about to get interesting and radical changes are on the way. Cheers, viewers. I'll see you next time.